All right, so get this. We've got a story that's making waves in Nigeria's financial world. Big time.
Oh.
Yeah, you guys have sent us some articles all about First Bank, and, well, things aren't exactly calm over there. Restructuring, leadership changes, even whispers of layoffs.
Hmm. Sounds
It
serious.
is, and we're going to break it all down for you. Even if you don't bank with First Bank, this is a story to watch. Could be a sign where the whole industry's heading.
You think so? I mean, First Bank's been around forever, right? Since the 1800s, haven't they?
1894, to be exact. So, yeah, they've seen it all, but this restructuring,
Yeah.
it feels different, like they're trying to reinvent themselves for a whole new era.
Yeah, it's fascinating, isn't it? And we've got articles from the ICIR, Daily Trust, and The Nation, all from the last couple of days of 2024. So very recent.
Super recent.
Yeah.
And each one gives us a slightly different angle on this story, so we'll kind of piece them together. Bit of a corporate puzzle, you could say.
High stakes, too.
Very high. Now, all the articles agree on one thing. First Bank is going through a major, and I mean major, restructuring.
Right, right.
The ICIR and Daily Trust suggest it's about boosting performance and making the bank ready for the future. But what does that actually mean?
Well, think about it this way. When a company restructures, it usually means there's some serious pressure happening. Could be from inside the company, could be from outside. Declining profits, maybe the market is changing.
Yeah.
Or sometimes you get a new CEO with a radical vision.
Yeah. Okay.
And in First Bank's case, well, it looks like we've got a little bit of everything going on.
Yeah, a little bit of everything. So we've got this backdrop of a bank trying to stay relevant, stay ahead of the curve, and then things get really interesting with the ICR's report about potential layoffs,
Hmm.
like a lot of layoffs, maybe as many as 100 senior staff.
Wow, that's a lot. That's a big number.
Huge number. So is this just about saving money, or is there something more strategic going on here?
Well, when you start seeing top executives getting let go, it usually means there's a change in direction, a change in leadership.
Yeah.
It's intentional.
Right. And the Nation even mentions that a prominent executive director, this guy was high up, wasn't reappointed. So it wasn't just a layoff. Someone at the top was basically shown the door.
Yeah, that's a bold move. Definitely signals that the power dynamics are shifting, and that's where this Otedola factor comes in.
The Otedola effect.
Yeah. He's the new chairman of First Bank's parent company, FBN Holdings. And, well, he's known for, how do I put this? Shaking things up.
Yeah, I was going to say, not every new chairman comes in and starts making waves like this. So tell me about this guy. Why is his involvement so noteworthy?
Okay, so a little background. Otedola is a billionaire businessman, and he's got this history of taking over companies and, well, transforming them.
Like a corporate makeover king?
Kind of, yeah. Some people might even say he has a Midas touch, but, it's not always smooth sailing. For example, back in 2009, he took control of African Petroleum, a big oil marketing company. He restructured aggressively, brought in new leadership, focused on efficiency, and the company's share price just skyrocketed.
So he's not afraid to make big moves, and he's got a track record of success.
Right.
But his takeover of Transcorp in 2011, wasn't that one a little less successful?
You're right. That's an important counterpoint. His time at Transcorp, it wasn't all rosy. There were internal disputes. And in the end, he actually stepped down amidst allegations of, well, financial mismanagement.
Oh, wow.
So it just goes to show you, even the most successful business leaders can stumble. And with Otedola at the helm of First Bank, it's not, a guaranteed victory.
Okay, so we've got this complex character at the center of it all, and he's already making significant changes.
Yeah.
And the ICIR even laid out this timeline, kind of like a roadmap of key events from 2024.
That roadmap, yeah.
The former CEO's sudden resignation in April, new directors appointed in May, then a leadership reshuffle in June, and now this massive restructuring at the very end of the year. It's been nonstop.
Yeah, and that timeline is really important because it shows that this wasn't just like random stuff happening. Each decision seems to have led to the next one, building up to this major restructuring. Like they've been setting the stage all year.
So if we connect all these dots, what kind of picture are we looking at? What are the implications? Because this is clearly bigger than just cutting costs or trying to improve performance. This is a fundamental shift in how First Bank operates.
Exactly. And to understand that shift, we need to zoom out a bit. Think about the bigger picture, the entire Nigerian banking landscape. And that's where this idea of a bellwether comes in.
Okay, a bellwether.
Mm.
For those of us who don't speak Wall Street, what does that mean?
It means that what happens at First Bank, it could have ripple effects throughout the whole industry. They're kind of like, the canary in the coal mine.
Right.
If they succeed with this radical transformation, other banks might follow suit. But if they fail, Well, it could be a warning sign for the whole sector.
So everyone's watching very closely to see how this plays out.
Absolutely. And to really understand what's at stake, we need to delve deeper into this restructuring. Like, what are they actually changing and what might the consequences be? Not just for First Bank, but for the whole Nigerian economy.
That's a good question.
And that's what we're going to explore in the next part of our deep dive. So let's start with what we actually know about this restructuring. The Daily Trust article mentions that First Bank is looking to, streamline operations and improve efficiency.
Okay.
Now, those are kind of those corporate buzzwords, right? You hear them all the time, but what do they actually mean? In reality, I mean.
Yeah, that's a great question. It's easy to get lost in all the jargon. Streamlining operations, does that mean like closing branches, investing in technology? What are we talking about?
It could be a lot of things, The Nation article, they talk about a digital transformation strategy, which suggests they're trying to move more stuff online, That could mean fewer branches, more investment in mobile banking, and potentially fewer staff needed for traditional transactions.
Makes sense. But
Yeah.
like you said earlier, the ICIR reported on some pretty significant potential layoffs, as many as 100 senior staff.
Right.
And even though First Bank hasn't confirmed those numbers, it's hard to imagine streamlining without, impacting people.
Yeah, absolutely. And that's where things get a little bit, complicated. The Daily Trust, they frame these departures as like a normal corporate restructuring, just aimed at improving performance. They even quote a banking analyst who says it's about right-sizing the workforce to meet the demands of a changing market.
Okay.
Yeah.
But wouldn't losing experienced staff hurt the bank in the short term, even if it's all part of a bigger plan? I mean, it seems like there's a risk of losing valuable, institutional knowledge.
Yeah, for sure. That's a valid concern, especially when you consider that First Bank's trying to, appeal to a younger customer base, right? The ones who are more tech savvy. You need people who get both worlds, the traditional banking and the digital landscape.
Yeah, you need people who can bridge the gap.
Exactly.
So there's this whole balancing act going on, right? Cutting costs, modernizing, retaining talent. It's a lot to juggle.
It is. It's a high wire act for sure. And one wrong step could have, some pretty serious consequences.
Absolutely.
And remember, those consequences, they go beyond just First Bank. We're talking about, a bellwether institution. If this restructuring works out, other banks might try to do the same thing.
Yeah.
But if it backfires, if there's instability or financial losses, it could create this ripple effect of uncertainty. And that could impact the whole Nigerian banking sector.
Right. So that brings us back to this Otedola guy. He's known for making bold moves, but as we said, his track record isn't perfect. Are there specific risks with his leadership? I mean, in this context?
Well, one concern is that he might be moving too fast, too soon, The Nation article, they actually describe his approach as drastic and even ruthless sometimes. And while that can be effective, in the short term, it can also alienate employees and create some long-term damage if it's not handled carefully.
Yeah, that makes sense. And there's also the potential for conflict with the existing leadership and staff, right? First Bank's been around forever. They have a very, ingrained culture.
Yeah.
And bringing in someone like Otedola, someone with his reputation for shaking things up, well, it could lead to some pushback, some internal power struggles.
For sure. And that kind of resistance, it can derail even the best plans. If employees feel like they're not being heard or that their expertise doesn't matter anymore, it can really hurt morale and productivity.
So, okay, we've got these potential risks. Job losses, disruption, possible conflict. But let's look at the other side. What are the potential benefits? What if Otedola and this new leadership team, what if they can pull it off?
Right. Well, if they can actually streamline everything, modernize their services, then First Bank could become, a much stronger player, right? Especially in the digital world. They could attract new customers, the younger generation, expand their market share, and ultimately become even more profitable.
Yeah, and that increased profitability, that could lead to more investment, more innovation, maybe even more jobs down the line, kind of like a domino effect, but, in a good way.
Exactly. But, and this is a big but, it all depends on whether they can actually execute this restructuring the right way. And that's what makes this whole thing so interesting.
Right.
Because it's not just about, numbers and balance sheets.
Yeah.
We're talking about people, about culture, about the identity of this bank that's been around for over 100 years, over 130 years.
Yeah, it's that tension between tradition and innovation, right?
Right.
You got this legacy, but you're also trying to reinvent yourself for the future. How do you bridge that gap? How do you change without losing, what makes you unique?
That's the million-dollar question. And honestly, it's not just banks, it's a lot of companies that are struggling with this.
Yeah.
It's about finding that sweet spot between honoring your past and embracing the future.
Okay, so as this story unfolds, what should we be keeping an eye on? What are the signs, the indicators
Yeah.
that will tell us whether this restructuring is actually working or whether it's, headed for disaster?
Well, one big indicator is, their financial performance. Will
Ah.
all these cost-cutting measures, these efficiency improvements, will they actually lead to higher profits?
Yeah.
We got to look at their earnings reports, their return on equity, their loan growth, all that good stuff.
All the juicy financial metrics.
Exactly. But beyond the numbers, we got to look at the people, right? How are the employees responding to all of this?
Right.
Are they, I don't know, are they motivated, engaged, or are they feeling kind of demoralized, uncertain about their jobs?
Yeah, that's a good point.
Because, employee satisfaction, that's a huge indicator of long-term success. If First Bank can keep their workforce happy and productive during all of this, this transition, it'll be a good sign that they're on the right track.
And what about customer satisfaction? I mean, are they seeing improvements in service, more convenient, online options, a better overall banking experience? Because at the end of the day, it's the customers that will decide whether this whole transformation is a success, right?
Absolutely. You hit the nail on the head. It's all about, meeting the needs of the people they serve. And that brings us back to that bigger picture we were talking about. We're not just analyzing First Bank in isolation.
Hmm.
We're using them as a way to understand the bigger trends, the forces shaping the whole Nigerian banking sector.
Okay, so what does all this mean for other banks, for investors, for the Nigerian economy as a whole? That's what we'll explore in the final part of our deep dive. All right, so we've spent a lot of time digging into this whole First Bank situation, right? We've looked at their restructuring plan, the risks, the possible benefits, and of course the Otola factor. Can't forget
It's
about
like
that.
big personality.
Huge.
Yeah.
But now I want to zoom out a little bit. Think about the bigger picture. What does First Bank's, I don't know, gamble? What does it mean for the rest of the Nigerian banking sector?
Well, like we've been saying, First Bank is kind of like a trendsetter, right? What they do often influences what other banks do. So if this restructuring actually works, if they become more profitable, more efficient, attract those younger customers,
Yeah.
we could see a wave of other banks doing the same thing.
So like copycats.
Basically, yeah. Other banks might start streamlining their operations, investing in all that digital tech, maybe even making some tough choices about their staff.
Yeah, so it could be a pretty turbulent time for the whole industry.
It could be. And that could have some good consequences, some bad consequences. On the one hand, you could end up with a more, I don't know, a more dynamic banking sector, more competitive, more innovative, a sector that's ready for whatever the economy throws at it.
Okay, yeah. And wouldn't that benefit, the average customer? More choices, better service, maybe even lower fees if the competition really heats up.
Potentially, yeah. But there's also that risk of instability, right? What if banks start restructuring too quickly without thinking it through?
Mm.
They could end up cutting too much, losing all that, expertise and making themselves vulnerable, especially if there's, an economic shock or something.
Yeah, that could have some pretty serious repercussions for the whole Nigerian economy, couldn't it?
Oh, absolutely. I mean,
Yeah.
banks, they play a huge role, right?
Yeah.
Investment, credit, making sure the whole financial system is stable.
Yeah.
If they're weakened, the whole thing could be affected.
Yeah. Right. So there's a lot at stake here. And it's not just, about profits and losses. It's about the social and economic well-being of millions of Nigerians.
Exactly.
And that makes me think about something we haven't really touched on. We've talked a lot about the business side of this, the profits, the market share, all that. But what about the people? What about the employees who lose their jobs? What about the communities that depend on those jobs?
Yeah, you're right. Those are really important questions, and they often get overlooked in these discussions about corporate stuff. It's easy to get lost in the big numbers, the abstract ideas. But But we got to remember there are real people involved.
Exactly.
Yeah.
Real people who might be struggling to find a new job to support their families. It's not just an economic issue, it's a human issue.
It is, and that's why it's so important for banks to think about those things, to approach these restructurings with a sense of responsibility. It's not just about making shareholders happy, it's about making sure the benefits of these changes they reach everyone.
So what can they do? I mean, is it enough to just offer, you know, severance packages and retraining programs?
Well, those are good starting points, but I think it also requires a deeper understanding of, the needs of the communities that are being affected. Maybe there are opportunities to invest in local businesses or create new training programs tailored to the skills that people actually need, or even work with the government to provide some sort of, a safety net.
So it's not just about fixing things after the fact. It's about anticipating the consequences and being proactive.
Exactly. Taking I guess, a more holistic approach, one that considers all the different aspects, the economic, the social, the human dimensions.
Mhm. That's a powerful message. It's
Yeah.
it's like a reminder that these business decisions, especially when they're made by big institutions like First Bank, they have a ripple effect. They reach far beyond the boardroom.
Yeah. And it's also a reminder that we all have a role to play, right? As consumers, as investors, as citizens, we have to, hold these institutions accountable, ask the tough questions, demand transparency, and make sure that these changes are being done in a way that benefits everyone, not just, a select few.
Yeah, absolutely. So as we wrap up this deep dive into the First Bank story, I think we've gone beyond just one bank's attempt to modernize, right?
Yeah.
We've explored this whole evolving industry, the good and the bad that comes with change, and the ethical considerations that everyone needs to think about.
And we've also, highlighted how important it is to think critically, to question assumptions, to consider different perspectives, because in a world that's constantly changing, that's more important than ever.
Couldn't have said it better myself. We've given you the background, the context, the key questions to consider. Now it's up to you to stay informed, to form your own opinions, and to be part of the conversation about the future of Nigerian banking. Because, well, it's a future that affects all of us.